Alright guys, let's talk market chop today. What we're going to be looking at is the triple Qs and the NASDAQ. We got triple Q up top, QQQ, that is the index, small cap index of one of the markets, and then we got NASDAQ on the bottom. So let's go over what chop is. First of all, chop is a name we give in the industry that means we are bouncing from level to level, as we see here. NASDAQ, or excuse me, the Qs, we opened up right around the 322 area and we bounced 322, 321. So in this about dollar range right here, almost exactly, is where we had most of our bouncing. That can be a good and a bad thing. Remember, we talked support and resistance. We can see the obvious support line, obvious resistance line. When we're taking this, we're using these as stop losses. So 322.78 would be a stop, and you got up to 322.89. So you would have been about 10 cents above your stop. It would have hit your stop and then went and plummeted back down. You would have lost because your stop's up here and it went above. You stopped out, and you would have went and missed your profits down below. That's just what happens with the market. Sucks to suck. It happens. So second stop would be around this time. You can see the obvious support and resistance levels. It just depends on what you want to do to take the chance to enter. Now up here we're looking at call contracts, down here we're looking at put contracts, and really what we want to see when we're making these entries is where does it align and what does the volatility show us within the option price. This itself is the volatility makeup of the options contract. And right here we see the volatility and the buyers and sellers. So we see option price going up, implements, there's more volatility coming in, and down below the 50. Right here, this little line is called the 50 EMA, the exponential moving average. We're gonna take entries below this for puts. It's gonna be below the 50, and then above the 50 you want to take the call. So basically what we're saying here is if it's above the 50, take the entry. 50 entry, you can never catch the full thing. You'll probably ride it till about right here till it establishes the next support level, but that is where you want to take it. And then you can say inverse when it breaks the 50. As you can see, it just trails below. There's no obvious sign of losing that. That is also due to the volatility at the end of the day, that no options prices are going to end up around the 305 area. So, and there's just nothing that's going to signify that it's going back up to 323, which is why the volatility here of these contracts is dying out. Anyway, let's get back into chop. We moved in today with the NASDAQ coming in right around that 13,300 level, which was a massive level. It's going to be yearly highs, lows, yearly highs to date. So we have a yearly high to date right here. This is about as high as we've been all year. Don't mention this little one. But we're coming into massive resistance, and that's a big factor, especially we have FOMC speaking this Wednesday, which is going to be a pivotal moment in this. Of course, when you're at highs and FOMC is going to speak, it's going to move the market drastically either down or up. I don't believe there will be any sideways action after FOMC speaks Wednesday, but we will have to see that. Let's go over our chop again. Chop just meaning back and forth again, like we said. There are still good entries to take within here, such as this one right here. It's the anchored VWAP. We could have easily took an entry off of here and rode it through pretty nicely. Too bad we missed that one. Would have been a good one to take. Bounced right off of it, as we can see here. Candle went through. Might have considered taking puts here. Would have eventually got stopped out and pulled the other way. So just bouncing along this VWAP and then decided to take off. And this is an 8:30 time frame, so we can see 8:30 our options price starts to go up eventually, and we could have taken an entry here if we were abiding by our 50 EMA rule, and we could have rode it out until it exited eventually up here, or just sold wherever we wanted to and profit. We could see that this is we could have seen that this was a resistance area, sold here, or a resistance area, sold here. We also could have rolled it up to this one as well. Riskier as it goes up, but it's the name of the game. So chop, moving back and forth. You see levels here. You don't want to trade in this. You see levels here. Don't want to trade in this either. It's just massive sideways action going throughout the day. Stayed all up in this range. I don't think I have traded a day where the NASDAQ has stayed within 50 points, so about 312, 313, all the way down to 312 to 13,280s is where we were. So really 30, 40 dollar range, which is extremely small for NASDAQ. It's a large mover. I'm surprised it didn't move more. But it's major chop zones. You don't want to trade in them. And that's all I kind of wanted to say throughout the video. I wanted to explain a little bit more as we get into these options, prices, and contracts, as well as letting you guys know some little industry terms here and there. Again, we're doing this drastically, and not trying to dive head in. If you have any questions, please let me know. Hope you guys have a good day, and we will see you tomorrow. Peace.